Welcome everyone to the CoinRock show. We had a few tech issues, and so we're starting a bit later than planned. I hope everyone's doing well. Let me put you guys on the big screen. Let's push this out to all the groups. Team, I think everything should be okay now. Let's have a look. Let me put you guys here and then flip the screen. There you go. Welcome everyone. Finally. It's been a bit of a mess today. I don't know, sometimes you're about to stream and everything breaks down. This happens every now and then. Streaming is great on paper. Like, it's great. It's a good idea people have, and then when you actually have to stream, it's like things happen. When you need to stream, something comes up, you have to jump on a call. Last minute news, updates, and you don't want to stream, but you have to stream because you have a commitment. So we're here. We are here. We're going to do, first of all, we'll have a look at some of the headlines here. And very bullish headlines, despite still being in this choppy range. Nothing fundamentally new here, aside from, honestly, very good headlines. So let me have a look here, and then we will have our guest join in about 15 minutes. The team, you have the link to add Deniz, our guest today. Today will be a very, very technical conversation with our guest, just because we'll be talking L1s, L2s, adoption, crypto adoption, very technical. But I'm going to try to translate the technicalities as much as possible, be the bridge between people who are extremely technical and experts at what they do. And we want to bring amazing people from our network, from the CoinRock network. We want to have like extremely high level experts who come on and share what they're doing, what they're thinking, the way they're thinking about the market. And at the same time, sometimes I have to be kind of the bridge between you guys, the audience, and the guest, because it is technical. And to be very blunt, sometimes I ask questions, and you guys know this. I say some of these episodes are very like selfishly interesting for me, because I get to ask questions to very interesting people. And yeah, and I think being in a space that moves so much, there's so much news every single day. If you forget about missing a few months, if you miss a few weeks, your narratives change, everything changes. So this is why you're here. I was saying this in one of the groups that we have yesterday, maybe 2 days ago. I was saying that I really like, the reason why we started CoinRock Media is to have distribution, right, for everything we do at CoinRock, but also because I think that there's this thing in crypto, also in TradFi, when it comes to financial shows, where it's a lot about shilling and pushing your own not just not just your own thesis, but also your own investments. And we try to really be extremely not just selective, but we try to bring education first here, even though we could be shilling a lot of stuff here on the show. And I'm not saying we won't, but I'm just saying that that's not the primary goal. Like, the projects that we have on the show, by the way, full disclosure, no one has, like, we don't charge guests. People don't pay. We've had offers where people want to come on and give us money to be on the show. Sometimes we might do it, right? I mean, there's nothing wrong with that business model, but it must not. And by the way, every news media outlet does that. Like, if you didn't know, anytime you see a very, very bullish piece of news for a coin or for a stock, oftentimes it's because the writer, or because the media organization got some upside, whether it's tokens, whether it's payments, whether it's press release packages. So, and that's fine, that's the business, right? I'm not I'm not saying it's wrong, because we will definitely be doing that, but it needs to be, there needs to be balance, right? And the way we bring information to the market. So today we're looking at Bitcoin at 105K. You know what's very interesting over the last few weeks and months is we talk about this almost on every show, right? I mean, the timeline is dead, in the sense that, of course, Solana went from what, 99 to 180. Now it dropped back to 150. ETH went up 80% from what, 1400 ish to 2700. So things not as like, it's not Goblin Town, but at the same time, we're nowhere near euphoria. And that being said, you have Bitcoin being at 105, $105,000, and ETH finding a very solid base around like 2,500, Solana around 150, hovering a bit more Solana more volatile than many other top 10, top 20 coins. But overall, I think this is very, very, very bullish. The thesis that we have, mid to long, so short term, depends on what Trump and the U.S. does. I think there's a lot of frustration from the financial, for many in the financial space, of like what the actual F is going on with these tariffs and everything. I think even pro-Trump supporters are getting annoyed by a lot of the things that were promised by the administration. I was very much pro-Trump, but at the same time, very level-headed when it comes to the things I like. And I've talked about this, not to make this into a political episode, but some things I fully support of what he ran on, and some things I completely disagree with. That being said, unfortunately, what we're seeing with the Trump administration is that a lot of the things that I thought were very good, and the way that he ran, some of the promises he ran on, which were actually feasible, right? It's a very, very difficult country to run. There's so many different, it's just very difficult to get anything done because of the Congress system and the Senate system. But that being said, there's a lot of things that have been disappointing. And so I think one of the things I think that everyone here was expecting, not just here, but just like outside, even in TradFi, was expecting less uncertainty. I mean, Trump did this in his first term, so it's not a complete surprise, but it's a lot of flip-flopping. I think it's getting to a point where the finance world is a bit like, can we actually get this, like these tariffs sorted? Can we actually have a consistent narrative for more than a few days? As you guys know, it's and the market is reacting less to tariffs on, tariffs off, tariffs on, tariffs off. We've seen that. So yeah, we're still in this range, right? But that being said, what we think is that these prices are very interesting given the amount of almost disinterest and like being in this boring phase, but still seeing Bitcoin at $105,000 and ETH at 2,600. So I see that as I'm again cautiously optimistic. I think the short term really depends on what Trump and the Fed does. As you guys probably know, there is a fight pretty much between Trump and the Fed and Jerome Powell. It'll be interesting to see who comes out. I'm surprised by how strong Powell has been so far. I wrote an article back in January, February about folding under pressure. So far, Jerome Powell is not folding under any pressure. So it'll be very interesting. I think that everything depends on what's happening in the US. There's some very bullish news in Asia, very bullish news in some parts of Europe, but that does not affect the market at all. US headlines really affect crypto prices. So with that being said, let's see some of the headlines. Circle is, so while everything is happening, right? While we're seeing this kind of this boring phase in the market, there's still a lot of opportunities, by the way. So this is when you should be paying attention to alts. This is when you shop for alts. This is when you shop for projects. This is when you shop for pre-sales. This is when you work on airdrops. This, when everyone loses interest, this is when you need to be, like balls to the wall to really maximize your gains, because when everything is up only, that's when you take some money off the table. Circle working, on the IPO. I think this is very bullish. Again, I think the more we see these companies going into the traditional finance, as you guys know now in this cycle, traditional finance, so let's call it the banks, the pension funds, that whole system is coming into crypto, and crypto is leaning more towards that system too, because there's a lot of capital that's looking for these new digital assets. So anything that, this is probably going to be one of the biggest IPOs, or one of the most interesting IPOs since Coinbase. I think two of the biggest players that have IPO'd, of course, Coinbase in the previous cycle, USDC in this, so Circle in this one. Also, I do think we should see this as a very bullish thing, just because it gives more credibility to stablecoins. Stablecoins are one of the biggest narratives this cycle, so I'm personally very bullish on this. One thing I wanted to show you guys here is, JP Morgan was openly anti-crypto for years. And guess what? They're actually offering, and we talked about this months ago. We said at some point, all these big banks they're going to be fudding Bitcoin, they're going to be fudding ETH. But make no mistake, they will be making calls and telling their wealth advisors and their private banking advisors to sell this new asset class to their clients. It's happening. JP Morgan expands crypto playbook with ETF loans and digital collateral. Done. They're in. I mean, there is no going back now. They can't miss out. It's getting to a point now where game theory is very much alive and kicking, because they can't miss it. Otherwise, other banks, other competitors to JP Morgan, who have been offering crypto and loans and ETF products and digital assets to clients, JP Morgan gets the question, why are you not doing this? I mean, all these other businesses, all these other banks are making X amount of millions, hundreds of millions, billions of dollars in fees. Why are you not making money here? You have a fiduciary obligation to make money for shareholders. You're not making money for us. And so they have to make money for the shareholders, even if they hate crypto. That's the whole thing here, right? Even if they hate crypto, it is irrelevant. They have to do it. They're going to be pressured into doing it. So JP Morgan's moving. Pakistan, this is very interesting. Huge country, hundreds of millions of people in Pakistan. Pakistan touts Bitcoin reserve plan in White House talks. So, there's been, India, Pakistan, a lot of countries in Asia have been pro-Bitcoin, so pro-crypto, anti-crypto, pro-crypto, anti-crypto, and talk about adoption. I mean, if those two countries, India and Pakistan, really greenlight crypto and say, okay, here's clear regulation, here's, one of the issues in India is the tax system. So tax on crypto is very high. Some parts of the country, I believe, literally don't allow crypto. So when they come around to accepting crypto and making it okay and actually having a framework, it's extremely bullish, because hundreds of millions of people will be then open and will have the green light to actually invest in crypto. Two more headlines, and then the team's just telling me that we have Deniz, who's going to join in a few minutes, our guest. The ETH Foundation, we've been talking about ETH for months too. I talked about this. I said that ETH has been quite horrendous over the last 12 to 18 months. And we talked about this, right? On camera, off camera, with some of the guests too, very close to the ETH Foundation. We've had several guests who are extremely close to the ETH Foundation and know what's happening. The ETH Foundation, it's no secret. I mean, you can find this all over Twitter, has been a mess. And this is very good. Ethereum Foundation restructures to enhance decentralization and operational efficiency. So look, at some point, there's there's pressure. There's too much pressure. People fold under pressure, right? When everyone's telling you, hey, the ETH Foundation is fumbling over and over and over again. At some point, heads roll, and then you have to actually do something about it. So I think, ETH being at 2,600 with a very solid base, I think with more efficient, like with a better team running the show, with better operations, I have no doubt that ETH will do well. Keep in mind that if it's not Bitcoin, right, when it comes to institutional interest, they're looking at Bitcoin, of course, and they're looking at ETH. That's it for now. When you talk to the big funds, when you talk about like real serious buyers, it's Bitcoin and ETH. At this point, practically nothing else. So very bullish on ETH. I think this was extremely needed. We'll see, of course, how it turns out, but I think it can only be better. And then another last one here, another headline: South Korea elects pro-crypto president, paving the way for digital asset reforms. Keep in mind, South Korea has always been very bullish digital assets. But again, this is great. This is, people in power who have decision-making access to literally rewriting new laws and being pro-crypto. This is what you want to see if you are in this space. So with that being said, I'm going to take a short 2-minute break, and then we will come back with Deniz, who is backstage. So stay connected, stay tuned. We will be back in exactly 2 minutes, and then we'll have a guest and talk about L1, L2s, and adoption. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. I'm going to add you to the stage now, and there you go.
Hey, how are you doing?
How's it going? Good. Welcome to the show.
Thank you for having me. It's a pleasure.
Yeah, it's this is going to be a very technical one, so I told the audience, hey, we have someone who really is deep in the weeds when it comes to L1s, L2s, tech. So on the development side, so this is one where I'm going to be asking a lot of questions about, you, of course, and what you're building. And yeah, this is this is it. This is the CoinRock show. So I'll do a quick bio based on the one we have, and then please go over your own bio, because we really want to the every guest's bio with their own words, and then we'll basically go over different things that you're building and talk about things. And that I want to preface this for the audience that Deniz, am I pronouncing your name correctly, by the way?
Yeah, it is. But if you find it easy, it's Dennis is fine as well with an S.
Dennis. Okay, Dennis. Yeah, perfect. So Dennis is a blockchain and DeFi architect with 10 plus years in software engineering. His expertise spans across blockchain technologies, L1 and L2s, dApps, and Web2 backend development. Passionate about turning Web3 visions into reality, and working on decentralized finance, RWA tokenization, and beyond. So again, a very short bio. I really want you to get into your own words. What do you do? Who are you, and what do you do, basically?
Okay, so I'm Dennis. I'm a software engineer by trade. So I've been a software engineer for now 15 years. I studied and I live in London. I've been in the Web3 space since 2016. I took a leap of faith. I quit my job in Web2, which was at the time with Thomson Reuters, the data analytics company / news agency. That's where I came across blockchain, Ethereum. I actually was tasked to lead the development on a Hyperledger Fabric blockchain for banks who wanted to track mortgage payments and see what they can sort of streamline. And then, I came across Ethereum, I came across blockchain in Bitcoin, and then I immediately actually left the company about a month after finding out. I tend to enjoy the technical aspects of development. Obviously, given my engineering background, I want to sort of push boundaries where I can, learn more different techniques of doing things, try to learn from the previous developments, advances in tech, and see how we can replicate that into Web3 and push it beyond its current boundaries and its current echo chambers that I call, so that we can get more people into blockchain and distributed ledger without them even realizing that they're on a blockchain. That's kind of the way I look at things.
Yep. Tell us about Lumia.
Sure. So Lumia, I joined about 8 months ago. So I'm the blockchain architect there. I try to bring the vision of where we want to see tokenization and ownership within the next 5 years, 10 years, and how we see onboarding institution and retail users at scale. So Lumia is catered and focused on RWAs. It's a layer 2 zkEVM that uses Polygon CDK stack with the Aragon client, which allows us to do many things that we couldn't before. And we built certain features onto the chain, like on-chain KYC, you do KYC once, and then you could reshare your credentials using ZKPs. We built OFAC sanctioned list. We built a bunch of indexes and baskets that are going to be hitting mainnet soon, where it's very easy for users to deploy their capital, and then we give them the best options across different chains, not just Lumia, to earn anywhere between 5 to 20%, and it's sustainable yield. So our focus is simplifying entire end-to-end use case of blockchains, but how do we incorporate that into tokenization? So we start removing the typical boundaries and the borders that we see in TradFi space, so that anyone with $10, $5 could start investing in real assets and generate sustainable yields.
Got it. Okay. So just so everyone knows, right? I think I said this before the show, but this is not a paid promo for Lumia. We haven't been paid at all. So this is Deniz coming on and talking about everything tech, and of course, if he's involved with something, we want to cover it, because otherwise, what's the point? The whole thesis of doing these CoinRock shows is to bring people who are active in the space, building, doing, investing on a day-to-day basis. So when it comes to layer 2s, what exactly do you do? Are you on the engineering team? Are you on the tell us more about your involvement with Lumia.
So I'm on the engineering team. I lead the engineering team over at Lumia. Although my sort of role is around blockchain architect, which effectively looks at the chain itself and how we could push boundaries, but I go beyond that. I sort of take part in day-to-day dApp developments on the Lumia chain itself. I take part in sort of off-chain components and how do we bring that data on-chain. So my day-to-day work is quite technical. I touch many things from dApps to off-chain components to the chain itself, and sort of try to find opportunities where we can optimize and improve what's already out there, so that we can actually truly offer something that's needed in the space, as opposed to just sort of hype-driven or narrative-driven products.
Yep. On the L2 side, I mean, there's been so many L2s over the years, right? What makes it different, and why do you guys quote exist in a way? How is Lumia different?
So Lumia is different because we're building very specific features that caters to both institutions, the compliance side of things, and what retail users want in general. So we have from three different verticals, right? From the institution side, what they want is a reliable and scalable chain, and they want a minimum trust, right? So that's why we chose to create the L2 and start building certain components that removes the weakest link within an L2 setup, where it's more centralized or there is more dependency. So these are things like the data availability layer, the sequence itself, the zk provers in our case, and we want to decentralize these components so that we give institutions what they want, which is a highly scalable blockchain, and yet there is the weakest links are minimized. I wouldn't say any L2 or us are going to be 100% decentralized anytime soon, because that's just not going to work. But if we remove some of these weakest links, which is what these stage 1, stage 2 refers to, then we have a better chance of getting the adoption we need, and institutions will start actually looking at it. But some of the things that we found out on the way and once we started this journey, is that sometimes institutions want full control over the chain or over the environment that they want to deploy. So in such cases, we actually kind of pivoted from our initial vision of just remaining an L2 to start offering L3s. So L3s are effectively app chains. And once we start offering infrastructure to these institutions where they have full control over the nodes, the chain itself, they can customize the chain.
It essentially allows them to have their own way of, they can build on top of you guys basically and have their own way of operating without needing to be on the L2 directly with you, but they have their own.
Exactly. So they have everything that Lumia has. So Lumia has several components like, Lumia Passport, OFAC sanctions list, the oracles, the indexes, and then we have the bridges integrated. We have Lumia Stream, which is kind of our bread and butter, and so where we differentiate from a lot of L2s. So you get all of that, but you get sovereignty as well at L3 level. And this is quite appealing to a lot of institutions that we have spoken to, because obviously to have your own L2, it's a lot of burden. You have to take care of a lot of things. And to build on an existing L2, you don't really have the sovereignty or the decision-making power to say, okay, I want to customize the chain this way, or if anything goes wrong, we don't have the luxury to say, I want to roll back the chain. But if you have your environment and your L3, then you have full control. We could even do on-premise deployment, which works very well for sovereign states and sort of institution level players. And that's kind of the approach that we're going now. We call it the infinite net. And you will start to hear more of it. But I think it's a good way to sort of onboard institutions, give them the comfort zone that they need to be convinced, but still have interoperability with the rest of the Web3 ecosystem.
Tell people a bit about because everyone talks about onboarding the institutions and adoption and everything. So you have the product, right? The L2 is the product. L3 is something they can use if they want to. What's the actual process? Is it biz dev reaching out to companies saying, hey, this is what we do? What's the exact process to get this into the right hands?
So there are multiple ways to do this. The way we've kind of are taking this on and the way it worked for us so far is we try to go into the institution. So we find an institution of interest that also has interest in Web3 and they want to kind of dabble in it. We try to find their pain points, right? What's their pain points? How do you, some of them are, for example, they want the ability to settle trades 24/7, but not necessarily have the burden to manage the infrastructure. So in that case, this is how we came out with L3. It's just a matter of going through these different pain points that the institutions have and then having one-to-one meetings and trying to understand their requirements and build something that caters to them especially. And that's the way we've been on board and that's the way we've been doing it, rather than sort of saying, okay, this is what we think they need. We try to actually understand what they need and then build around that. And in general, that's why I think that's how I think onboarding is. It's not a matter of, oh, let's do account abstraction, chain abstraction, and see if it works. You have to really understand the business problems, and then you have a higher chance of getting the traction you need.
How many clients, how many users do you have as of today?
So as of today, committed? So we have 15 dApps in the pipeline that's going to be coming on chain. We are talking to 5 big, massive clients. Of course, the teams. On the mainnet, we had about 500,000 wallets active, used the mainnet so far. On the testnet, it was even higher. We were the most active testnet on CDK stack to date. We had about 20 million transactions, 700,000 wallets. So that's where we currently stand. And our dApps are coming online within the next 2-3 weeks. So the activity should start increasing over time.
Got it. Okay. How long do you estimate the quote sales cycle between, showing this, like the initial, the first meeting with an institution to actually them being interested, to them deploying is it, obviously it's not a one-time meeting, but what do you guys see when you have these conversations?
So it depends on the size of the institution you're talking to. If it's a very large corporate organization, then it takes a lot more time. So we usually have 4 to 5 meetings before
Yep.
we come to some sort of a conclusion. So the first meeting is usually just sort of introductory. We do a pitch deck session. We try to understand their problems. Then they follow up if they're interested. And then we go into more details on what they're interested in actually.
Yep.
So that takes about 4 or 5 meetings, sometimes in person, sometimes over Zoom. But yeah, I mean, sometimes if it's a small startup or if it's a small scale client, then it could be much quicker because they know exactly what they want and they don't have a lot of bureaucracy to handle. So, you know, it just depends on the client.
Yeah, got it. Okay. In terms of the actual raise, how much did you guys raise? I don't know if you can share numbers. I know you shared some of the investors. Was it a big raise? Was it, how was the raise process basically to be able to build?
So we actually haven't done a major raise since 2021.
Okay.
So I think at the time a raise, because I wasn't with the team back in 2021,
Yeah,
so
yeah.
I'm not sure of the exact numbers, but I think it was about 5 to 6 million that was raised.
Yep. Okay.
And then they did about 200x on the token price for the investors.
Yep.
Then we did a node sale back in November.
Yep.
The node sale was for data availability nodes. So we're doing something with data availability and light clients, and we're working with Avail on that front as well. And we did about 5 million on that node sale. So that's the two raises that we've done over the past 5 years, and we continue to use those funds to develop the product.
Yep, got it. Okay. In terms of the actual team, so you lead engineering, right? So how many developers, how much talent is on the engineering side versus marketing, you know, community, etc.?
So we try to stay engineering heavy because obviously we want to build tech. So we have about 15 engineers right now that are effectively just kind of all full stack developers. Some are Solidity developers only. They are split across different products that we're working on. So Stream, Chain, the DEXs, the DeFi lending borrowing protocols that we're working on in the background. And then we have about, I think, 10 BDs that works on different areas, different countries. They cover different time zones. And then about 5 or 6 people in marketing. We are actually hiring a new CMO currently. So we're in the process of interviewing. So we should see some action and development on our marketing front as well. And then, you know, there's the 3 of us as the co-founders.
Got it. Oh, so you are a co-founder too?
Yeah. Sorry, I should have mentioned that way
God,
earlier. I
okay.
am
You
a
should have said that. God, okay. Okay, good. In terms of, so the biggest issue, I mean, you know this, right, is always adoption, especially with L2s. You know, it's you know, this, you know the technical aspects much better than me. On the dApp side, what's your, you know, because even if you look at the last cycle, there's been a lot of L2s started, right? I mean, they started peaking a bit towards the end of last cycle. What's the solution? Like, why so many L2s? Why are so many L2s failing to get users? And what's your take on growth, basically?
Yeah. So I think in general, L2s became a thing because, again, it was very narrative driven technology in the initial phases. You know, you would start an L2 and immediately raise millions. So that's just generally how crypto world works, unfortunately. But now people realize that creating an L2 on its own is it's pointless. Like, there is no point to it. You're not going to get much user traction. So the way I see it, it's sort of gradual maturity of technology. We started with many L2s. Many of them have died already. Many more will die as well in the process. But the way to kind of growth hack and see real traction on your chain is, from our perspective as Lumia, we know there are other RWA chains that exist, or RWA protocols that exist, and tokenization is becoming a big trend. But we focus more on post-tokenization. So what happens after tokenization? Everybody focuses on tokenization itself, the issuance of the token. But if you can start providing solutions to tokenize assets after they tokenize, so how do you integrate that into DeFi? How can I borrow against it? How can I trade it actively on chain? Then you start standing out and you start creating a area of interest for different users, for both Web3 users and for Web2 users who are just entering the space. So we want all chains who are focusing on RWAs to win massively in terms of issuance, because the more tokens that are issued, and they are interoperable through bridges like Hyperlane, etc., then we could get those tokens over to Lumia, and then we could offer trading avenues. We could offer DEXs, we could offer DeFi protocols, we could offer on-chain perps that use as collateral. And effectively, we start tapping into the success of other chains. So we try to actually advocate more for sort of working together as opposed to trying to fight each other, because the pie is big enough and the current user base that we have is not big enough. So in terms of tokenization, it's a huge market, but the current user base that we have in Web3 is tiny, and we need to expand that. And the only way to expand it is by actually building creative solutions, by removing all the complexity of the blockchain, by removing the fact that the user doesn't care about which chain he's on, how he interacts. The only thing they care about is effectively how much can I make with the minimum risk possible. And if we could offer those solutions as Lumia, then we're going to naturally get the traction we need. And that's why we'll focus on many post-tokenization dApps and infrastructure needs, as opposed to the issuance side of things.
So essentially, this is interesting, right? So essentially, you're using adoption by you're aiming to grow your adoption by being a connector to and via other L1s, L2s that are focusing on the actual tokenization, and you come in as more of a solution after they've onboarded, after they've issued the tokens.
Yeah, correct. I mean, we still have the token issuance side, so we have our own process, we have our own application that could also do tokenization up to the standard that regulatories need, including like KYB, reserve, proof of reserve, the tracking of the asset, the underlying asset itself in real time. So we could do all of that. But where we want to really put our focus and money on is post-tokenization. And that's where you start generating like fees, activity for your chain, and even beyond the chain, right? If I can take an app and turn it into a mobile app on iOS and Android and make it very simple, even though it uses Lumia in the background, I can start marketing that to the large audience around the globe, not just the Web3 people, and start onboarding them. And that's kind of the way we want to Trojan horse this whole growth mechanism.
Yeah, got it. So let me ask you this. On the, I definitely want to talk about tokenization, because I know it's something that, I mean, that's the crux of what you guys do, and I think it's, of course, one of the biggest narratives of the coming years. So who are the competitors? Are they focusing more on the front? Basically, if you look at the business model, you're coming back pretty much on the back end and kind of using the efforts that that a lot of the tokenization narrative is, right? Let's tokenize this asset, this company, etc. So I like the Trojan horse analogy, because that's exactly the way I understand it. How is it received by other companies, other L1s, L2s, other projects who are focusing on the actual front? And basically, why wouldn't they do it themselves? Of course, your first answer is probably because it's very tough and that's all you guys do and it's much tougher to build. But I'm curious to hear more about, how are they responding to the Trojan horse idea, basically?
Well, as you say, a lot of them focus on issuance, and this tokenization process is the difficult part. So not a lot of people are able to crack this. So once we crack it and we start releasing some of the code, which will be open source, of course, I'm pretty sure we're going to see a lot of forks of it, a lot of replications or iterations of the protocol, just like Uniswap's kickstarted the DEX process. We'll probably see the same kind of thing. So right now, when we speak to any partners, whether they're chains, whether they're dApps, they're quite open and receptive, because they understand that the space has to grow beyond what it is today. And right now, if we continue to fight each other, the entire space is kind of spiraling downwards. It's PvP moment right now, right? So if you're first in DeFi, you're making the most. If you enter last, you are the yield. That's kind of what the process is. And they understand the dangers that comes with it. And tokenization actually gives us that glimpse of hope that we can actually start building blockchains and ecosystems that actually make sense. It's not just on blockchain for the sake of being blockchain. And when you speak to like-minded individuals and projects, they understand the dangers, they understand the potential and how big the pie can be. So they're
Yep.
quite receptive in general. But over time, as I said, I'm sure we're going to see more competitors and we're going to see more iterations of the products that we will push
Sure.
out there.
Speaking of like tokenization itself, right? So it's been, and we've seen so many pitches when it comes to tokenizing assets, real world assets. Over the last, I mean, it's really spiked. I'd say, I mean, we were getting dozens of decks a week purely on RWA, probably Q3, Q4 last year. What's your take on the actual narrative? Like, what do people? Because everyone hears RWA. What's the truth? What are you seeing that most of retail doesn't see when it comes to RWA?
So in terms of RWA, I think people assume it's just one of those hype narratives that you see in crypto in general.
Yep.
It's going to last for 5 months, 6 months, and then it's going to fade out. But as I mentioned earlier, it's actually one of those narratives that truly has weight to it and traction to it. And it's not just, random Web3 person like myself saying this. You could see this by money market funds being tokenized, by BlackRock's, Franklin Templeton's. So there is clear interest. And we do actually speak to these institutions in the background as well. So they have further interest to develop this ecosystem even more. So having looked at that and having looked at some of the quotes that you hear from from BlackRock CEOs and other institutional players, that tokenization is the way forward and that this current infrastructure that they have in place has to be upgraded to the next decade of financial systems that's coming on chain. It just makes perfect sense. Right now, I see it as a stage where we're on stage one, where we mimic and mirror the real life assets that we have. So you create tokens backed on assets, real world assets. But over time, as more and more traction comes on chain, as more dApps come on chain, as more dApps are built and put on chain and more users are acquired, it effectively starts flipping the script on its head because now you have blockchain becoming the source of truth as opposed to off-chain mechanisms becoming source of truth. So this is like a transition phase, and it's not a hype narrative.
How soon do you think we start seeing that? I completely agree, by the way. How soon do you think that actually happens?
So this, I think, kind of links to AI's development as well. And it's not just siloed to Web3 and blockchain. It actually links with AI, because obviously when AI develops to a certain level and there is a certain level of intelligence that where they can start managing our money, where they can start finding us best opportunities, where is the logical place for AI to do this? If you put them into traditional systems today, an AI agent cannot do KYC. They cannot create a bank account, but they can create a wallet. They can do agent verification, agent-to-agent verification, communication. And if you release it onto the chain, it has endless, boundless opportunities. But if you release into centralized systems, it's only within that system that it could work on. So I think as agents get more sort of smarter and independent, they need to have a natural place to play about with all these capabilities. And that's where they converge with blockchain, in my opinion. So for the next 5 to 10 years, we're going to see this transition of going from, manual hedge fund, asset fund, traditional type of TradFi space to more automated on-chain and transparent yield management and asset management. And we are already seeing this. I mean, we have sovereign level states trying to upgrade their entire infrastructure to come on chain, to have a 24/7 trading mechanism. And these things are just not possible with the current system. So we are on the path to that transition and making blockchain the source of truth.
Yep, I agree. I mean, one of the things, I mean, I've seen so many pitches about RWA plays based on rare metals, mines. I'm sure you've seen those too. It's very difficult to even assess the value of those because ultimately you're back almost looking at, into the commodities market. Is this a junior mine? How much is this worth? So it's very difficult to estimate today. I completely agree that the source of truth will be flipped at some point, because it's very difficult to estimate, and you can send 10 different mining experts to the same mine, and they'll have usually varying degrees of evaluations. Whereas on the blockchain, it is much more transparent. What are some of the things that you think, if we talk about the challenges when it comes to tokenization, RWA, what are the things that that the industry or that you guys need to solve to really get growth, adoption, etc.?
Yeah. So from an engineering perspective, I wouldn't say we completed it and we're ready to go.
Yep.
I mean, there is always room for development and optimization, right? But we already seen many scalable layer 2s, layer 1s, ability to interact with like things like Apple Pay, credit cards, etc., to on-ramp,
Yep.
off-ramp these things. So from tech side, we are at a place where it's quite sound and it's quite reliable. But there are other things that's beyond tech, like the regulations. The regulations are still not very clear. It's still a gray area, especially for securities, right? We don't really know where we stand. I mean, people do things like tokenizing stocks, etc. But when you dig down into the legals, you realize it's not really a setup that the institution can rely on at scale. So that's one of the next areas that we need to find a solution to. And I mean, the US obviously has changed 180, from its previous administration to current. It's a complete change. So I think with US opening up and becoming more bullish and aggressive on tokenization and in general blockchain technology, the world will soon follow, which we are already seeing. We are seeing regulations like MiCA in place. We are seeing the same set of regulations in the Middle East, in Turkey. So there's definitely movement towards that and making regulations clear. Once we go over that hurdle, I think that one of the things that we need to solve from an engineering, I guess, and from a market making perspective is liquidity fragmentation as well. So everybody talks about liquidity fragmentation, but nobody has really cracked it yet. And obviously more layer 2s mean more fragmentation. So that's another area that we need to focus on. So I would say regulatory.
What's the solution? That's actually a very good point, because with so many RWA plays, so many tokens coming out in the coming years, what's the solution to liquidity then, from your view?
So liquidity should be abstracted away beyond chains and centralized entities. I say that in the sense that there should be solutions that takes liquidity from one party and makes it available to the other party, regardless of where it sits, what chain it sits, and I should be able to settle a trade immediately. That's kind of the solutions that from an engineering
cross-chain. So basically liquidity needs to be mobile. Interesting.
Exactly. And it should never be idle, right? You should never have billions and millions of crypto assets sitting in a pool waiting to be borrowed or lent out. Like if it's idle, it's money that's not working. We need to find solutions that has to have a mechanism to make money work. I mean, I don't want to go back to Lumia, but one of the things that we are doing on Lumia is called Lumia Stream, which is kind of our main advantage over our competitors. It's effectively a chain-agnostic liquidity layer. We take, for example, we plug into centralized exchanges like Binance, OKX, and hopefully in the future some stock markets that are coming on chain. And then we take that liquidity and we make it available to DEXs through like 1inch Uniswap Pancake. So that
is that
way,
already live?
It's actually live. We're one of the resolvers on 1inch. So we settle trades for 1inch at the moment. We integrate with Binance. We're expanding into OKX and Bybit as we speak for the next 5 to 6 weeks. And then once some of the things that we're working on come to fruition, we are hoping to tap into TradFi liquidity as well with the same component. So instead of linking it to Binance, for example, we'll link it to, I don't know, let's say Nasdaq Stock Exchange. So we can pull some of that liquidity from there. So that's the kind of mechanism that we need, where it takes liquidity where it's abundant and provides it where it's not so much. And that way, money flows in and out of chains. It doesn't matter where it lives. And if I, for example, have some liquidity in my wallet, rather than keeping it in my wallet and just letting it sit there, I could drop it into this liquidity stream, Lumia Stream, and it would utilize my funds where requests are coming from. And this is the type of abstraction layer that we need for liquidity in general, where if you are building a liquidity solution, I would say do not even cater to a single chain and just be
Yeah.
chain agnostic as possible.
Yeah.
Try to take sort of inspiration from Web2 solutions because they're quite agnostic. They just work wherever they are needed. As opposed to kind of, maximalist view. I want to serve Bitcoin. I want to serve Ethereum. That should not be the case.
Yeah, no, I talk a lot about like the dangers of being too tribal. I think it's a big problem in crypto in general.
Yeah.
It's you buy a token or you don't buy a token, and it's like supporting a favorite team against the Derby on Sunday afternoon on TV. It's ridiculous, right? I think that if look, I think Bitcoin maxis have a point. Of course, it's the best performing asset in history, but I think other assets have a place in the market, of course.
Yeah.
And I think everything benefits. I completely agree. I really like the idea. Liquidity is a big problem, right? That's why a lot of people cannot deploy assets and funds into assets.
That's actually a big problem for current retail user base that we have. Imagine the scale of the problem when institutions with billions of dollars come on chain.
Of course.
It's just going to go up.
I think people tend to forget, right? I think retail is just, especially on Twitter, it's such a small bubble, right? I mean, you have to understand that, not you, Deniz, but people have to understand, you're watching, that the crypto market is tiny, right? I mean, there's no room in these coins for someone to come in and buy anything with size after, the 20th, 30th coin on CoinRock. It's not interesting for these big players. And that's a big problem for sure.
Yeah.
When do you think that could be fully solved? Like the liquidity side? I really like the idea.
I mean, based on some of the stuff that we're working on, based on some of the stuff that our competitors are working on, and I think one of the prerequisites to solving this issue is tapping into that enormous amount of liquidity, whether that's through stock markets or working with a private that's in the TradFi space.
Yeah.
Once we start onboarding those players, the solution in terms of engineering is already there. So I think regulatory clearance, maybe stuff like the Stablecoin Act in the US, will start onboarding more institutions as well. And once that happens, then we can start really seeing liquidity flow in and out. So I don't think it's too far away. I think maybe a year, maybe 2 years, we'll start having.
That's pretty quick. I was going to say 3 to 5 years. No, I mean, look, it's going to happen at some point. There's too much money sitting around doing nothing.
Yeah, and especially in real world assets, like take properties, for example, right? We see property as a sort of asset that's hard, and that's why we park a lot of our liquidity as individuals into these assets, but they're very liquid. And at the end of the day, if you have equity on your house and you want to release that, if we can bring that on chain and release it instantly, imagine the amount of opportunities that we can create with those idle funds.
Okay, we have about 7 minutes left. I'm curious to know more. What are you the most interested or excited about in this market? Right, it's been a very weird market cycle. If we even talk about the 4-year cycle, what gets you excited?
So what gets me excited personally is the potential to truly onboard those billions that we've been talking about for years. Right? It's actually here now. It's in our grasp if we can just build applications and opportunities that they need. As long as, of course, regulatory clarity comes with it as well. So I want to build effectively Robin Hoods of tokenization. Right? So if what Robinhood did for stock market, I want to do it for housing market. I want to do it for commodities. I want to do it for precious metals. And I want an individual who may have $10 in their bank account to have the opportunity to invest in something that they see as a potential. Because right now, it's all sort of like closed off. You need to have a certain amount of net worth. You need to be accredited. But if we could bring those barriers right down and unlock that liquidity and bring more people on chain, then we actually have good use case to continue to build distributed ledger technologies. Because let's be honest, till now, we've created a lot of Ponzi's. We've created a lot of hype narratives. We created a lot of air, effectively. Now it's time to actually build something of substance and build something of value that people are going to use, institutions are going to use, and even states are going to use. So I'm excited for the next 3 to 5 years, and I want to see how all this converges with AI as well, so that you have a fully autonomous system, all transparent. You could track it from one step to the finish line, the first step to the finish line, and just allow anyone to make a return as long as they have a bit of savings.
Do you think the challenge is technical, because you are technical, or is it more on the marketing PR side to onboard these big players or these big industries?
I think if I was to put a percentage on it, I would say 30% of it is technical, and then 70% of it is probably all regulatory, BD, just kind of bureaucracy that comes with it. So tech challenges are, of course, difficult to overcome, some of them. But tech always has a way to figure things out. There are many, many talented engineers around the world. There are many talented, smart individuals around the world, and we always find a solution to a technical problem. The real problem is when human nature is involved and egos are involved and politics are involved. So that's the challenge that we need to overcome. And if we could overcome that, then tech will be there by the time we overcome that.
Yep. Are you seeing countries that are more open to this, areas in the world, regions that are more open to this, and some that are much more closed?
Yeah, I mean, I'm based in the UK, so I can speak on Europe in general, and then Middle East, because that's where we do a lot of business right now. So in Europe, in comparison to the Gulf, Middle East region, it's two completely, different ball games. Middle East is very open, like especially the UAE. They're ready to try it. They are not afraid of giving it a go, creating pilot programs and seeing how things work out. I mean, with this distributed land registry that Dubai just created, natively issued title deeds on chain. Imagine that comes to Europe. I mean, I don't see that come to Europe in the next 5 years because of the amount of bureaucracy that EU has in general. So some countries are definitely way more open. And it's the more east you go, the more open and flexible they become. The more west you go, the more rigid and bureaucracy there is. That's kind of the trend that we've been seeing in general.
Yeah, I agree. Which is unfortunate, because you have extremely high valuations of real estate and companies in the West. And so I personally think that RWA, the biggest boom will be when the West starts opening up. There's trillions of dollars to be unlocked, and it is extremely political and bureaucratic. And the political system in the West, as you know, is very politicians like to block initiatives just to block the initiative for no other reason than just to have a way to stop the opposition or the party initiating. So where some countries can decide overnight and say, yes, we're doing this today. Who are the best companies to talk to? And they can, look what Trump did in the Middle East a few weeks ago. He can talk directly to the decision makers, whereas talking to decision makers in Europe, you have to go to the EU. It's a much more complex setup. So it's I definitely have the same view on things.
But I think US will lead this change. I think US is going to change everything, and EU tends to follow what US does eventually.
I say this a lot. I completely agree verbatim. I say, Europe is the US. It just follows the US. Whatever the US does nowadays, there was a time when Europe was innovating, let's say after World War II to like the 2000s, a lot of German engineering. And now, unfortunately, Europe just follows the US. If it's unfortunately, it's sad.
It's very unfortunate. I mean, especially having grown up in Europe for the last 25 years, things have changed so much. There used to be so much innovation, so many things that we were good at. Now we're creating caps that are attached to bottles. I mean, that's just
You see that meme? What a great meme.
That meme is hilarious.
It's so annoying. It's so much potential, so much money and talent, and people wanting to, like, young entrepreneurs, young builders and engineers wanting to build, and they just leave, because why would you stay in Europe? The product of Europe is actually not a great product when you look at other other regions in the world. So
exactly, agree.
Last question for you. I have to ask this because the audience loves this question, is what do you think of this cycle? We're talking pure price action. What are you thinking Bitcoin hits in terms of all-time highs? Are you bullish? Are you bearish? What's your view?
So I think the current market structure is sort of showing signs of maturity in terms of general market. So it's not your 27 market. It's not your 2016 market. It's way different, and we could always see it. I mean, I joke around calling this a bull bear market, right? Sometimes it's bull, sometimes it's bear. You just don't know where it stands. But that's how the markets are in general, and I think that's a good sign. Things are maturing. There are more professional investors. They know how to hunt people. They know how to hunt positions, which brings even more talent to the space, because if there is money to be made and there's opportunity, there's going to be talent coming into the space, which obviously I like. In general, I'm bullish, of course. I'm bullish on Bitcoin. I'm bullish on number of altcoins, including Lumia itself. I think Bitcoin, well, my personal exit strategy is around 120 to 140K.
Ooh, okay, interesting.
So I will start exiting then, and then hopefully I can catch the bottoms around like 80 to 70K. But I don't see it going below, like below 70K where it crashes. I don't even think, maybe I'm wrong, obviously, but I don't think we're going to have the typical cycle of 4 years bear market and then 2 years bull market. It's changed. The whole dynamics has changed. We didn't have ETFs for last bull market. Now we have ETFs. Now we have sovereign states in the US actually buying Bitcoin reserves. We have other countries buying Bitcoin reserves. So it's a completely different market. I understand people relay historical data to try to make sense of things, but just because it looks like something doesn't mean it's going to be that thing. So that's the current market setup, I think.
Yeah, I agree. The market has matured. It's changed. I don't believe in the classic 4-year cycle that we've seen in the past. It's shorter cycles, different buyer and holder types now, and but overall very bullish for the on the space itself.
Yeah, likewise.
Yeah. Anything you want to? So we'll link all your. We'll link Lumia. We'll link all your any links that you want that you mentioned. We'll
I mean, just you probably share it anyway. Just hit us up on X, Discord, Telegram, wherever you want to chat with us. We're always available and around. I would say one thing in general, not just sort of relating to Lumia, is that if you are getting into the space, try to actually do a bit of research and do not chase. I mean, everybody chases quick wins, even I do sometimes. So it's a good narrative to flip in and out, but you have to understand that building true wealth takes time, and you have to have a certain mindset and a certain time period in your mind, because things can get bumpy along the way. Just don't cave in and fold and sell your precious digital assets to the big boys in Wall Street.
Very much aligned with that take. Deniz, it was a pleasure. Thank you for talking technical. I think a lot of people see these words and L2s and this and that. They don't really know. They don't know what tokenization really is. So thank you for coming on the show, and we'll have the replay, we'll have the articles going out in the next few days. Thank you everyone for joining, and we will catch you next time.
Thank you for having me.
Hey, thanks for watching. If you got value from this episode, you're gonna love what's coming next, so subscribe now. We drop new episodes and videos several times a week featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description, and we'll see you on the next show.